Traders say that there is a slight increase in bond yields across the curve. However, liquidity in the market continues to tighten. Meanwhile, analysts expect the results of last week's retail action for secondary market interventions today. And I have Kinskin Ukeje, the foreign exchange dealer at Access Bank. He joins me now for more on the morning markets. Thank you so much for your time today, Kinskin. But let me start before we get into the market. Let's talk a little about what we just saw play out in terms of the budget, and definitely it has implications for the markets. And I'd like to get your take on the biggest story for you there.
The biggest point for me on that end would be, thank you for having me. The biggest point on that end would be the funding aspect of it. So what we should just see is how do the government need to raise the funds to match the budget in this sense. And like the earlier person spoke, subsidy is still a concern. So the funding of this one will flow into the market, and we have to see the political will to raise rates in order for investors should be willing to fund the budget.
All right, and let's get into your take on the activity in the market this week so far then.
Yeah, for the market, it was a short week. Starting at Tuesday, we saw market levels start at 959 billion. We have, however, seen this market liquidity come down over the week. We saw it come down to 407 on Wednesday and 99 billion yesterday. This is as market participants fund their obligations, which are mainly repo maturing obligations, which they took last week due to the increase in CRR.
Yeah, because I was going to get into the CRR depths and more or less how that is impacting the ability of banks to participate.
Yeah, it's affecting, it was a huge liquidity outflow from the banks. So the banks resulted into the CBN repo window to fund for that outflow and have been paying down on their obligations as they're maturing.
All right, let's get more on the retail SMIS auction results then.
Yeah, for the retail SMIS auction result, we expect the results today by close of business, as the CBN will be releasing the results of the auction conducted last week. And we hope to see the results in the intervention span across the spots to 180 days forwards.
Let's looking at the markets now on the bond space. What are your yield expectations going into next week then?
Yeah, my yield expectation is that it's still going to go high. We're going to still see a bearish undertone because most market participants will want to do away with their short end, with their low yielding bonds position. So there'll be a lot of sellers in the market, and that's what we should also expect a higher yield in the coming bond auction.
Yeah, because looking at all the indicators, how are you looking at the full year then in terms of how the yields will play out?
Based on the indicators, we still of the opinion that the rates should go up by end of year. Also, even on the FX space, we should just see an increase in rates across all markets.
All right, now I understand that we're seeing on the Tbills side, we're seeing quite some activity there in terms of the OMO bills and the special bills, and I'm trying to understand how you see this momentum playing out going into next week.
Yeah, the activities on the Tbills end is mainly because of the liquidity play. So we have a lot of offers which market participants are trying to sell off their funds to fund obligations. The activities we see, the mild activities we see on the short end is that of the willing investors who are willing to just put the little liquidity they have into an investment just for the short term. But generally the market view is more of on the selling side, more of a bearish undertone. But still in the TB space is still totally, market participants are still playing on a cautious note in that space.
Yeah, because now the big question is more or less how liquidity will play out going forward. And where do you see any respite coming?
I do not, with the increase in CRR, the impact should still carry us maybe through the end of October, and then the respite should come maybe in November.
All right, but in terms of the general market then, what's your outlook for the fourth quarter?
First quarter of next year?
The fourth quarter of this year?
The fourth quarter of this year. General outlook, like I said earlier, we would see an increase in rates across all markets, even in the FX market. We have seen the CBN continue to adjust the rates on a strategic method going into the end of the year. We should see more of that.